Massmart now, let's talk about that one. Of course, the group of companies that it incorporates are Game, and Game, of course, is doing a whole food co thing. Builders Warehouse for the dads on the weekends. DionWired, flat screen TVs, Cambridge and CBW, and then, of course, Macro. They've got about 19 Macro stores. The obvious point here, everyone knows, 51% held by Walmart, the world's largest retailer. People expected a hell of a lot when they came in and bought into the company, but it hasn't really done a lot of work since then in terms of firing up earnings growth. Market capitalization 27 billion rand, price earnings ratio 24.12, dividend yield of 2.07. Let's look at the chart, because the 5-year chart will reflect that, nothing much going on there. I guess in the early days, people expected Walmart transition to be more meaningful in terms of margins or growth or something, and really what's happened since then is it's just sort of muddled around.
Yeah, I think what's really disappointed the market and why we seeing that chart moving downwards and sideways is that the turnaround has taken much longer than what the market was expecting. Everyone thought Massmart would be able to drive quick change within the business, but we just haven't seen those margins improving from Game. But the star within that portfolio is both Macro as well as Builders Warehouse.
I was going to say, there's not that there aren't bright spots, because Macros do well, and there's a big booze component to that. DIY, sort of high-end Home Depot type knockoff model that they have in the Builders Warehouse has been very popular.
It has been, and that's where a lot of the earnings growth has come from for Massmart.
There's an issue about the way they report earnings, which I've also always been a little bit skeptical of, and that is where they take their international financing arrangements and they write up or down the impact of those and take them through the income statement. So it often makes the trading statements and the results look either slightly better or slightly worse than you might think, which is just a reporting issue in a way. I always think it's a good idea if company managements guide the eyes of the investor to the core earnings number that they're trying to demonstrate the earnings growth of the business or otherwise, but they don't seem to think that's true.
I don't follow that closely, so I'll definitely believe you on this one.
As far as management's concerned, Guy Hayward took over from Grant Patterson. Again, foreign input from Walmart seems to be there. There are some Walmart guys on the board. Another question I always keep asking is, why don't they just rename all the Game stores to be Walmart, all the Macros to be Walmart? But apparently that's also not a good idea.
I don't think it would be cost effective to do that, but I think we are starting to see changes. If you walk into a Game store, I mean, we've seen them introducing some fresh produce, so trying to get those margins up. I mean,
and to be fair to them, you do get Walmart specials in some of the group stores as well, where they take advantage of the Walmart group buying. And even though I'm sounding very negative, the most recent set of earnings also looked reasonable, slightly better than I expected anyway.
Reasonable, but I don't think the outlook is exciting.
So you're going to go with not hot here?
Not hot.
Yeah, not hot too. So there you go. Unfortunately, that's the way it breaks.